guys, hello family, hello smart money traders. This is Rambo KE again. So today I want to show you a very simple model that you can use to trade the forex market. Alright, but before we go into that, this model is only applicable when you are trading Eurusd or TPP USD. Alright, it's a simple model that anyone can trade. Just it has some few bulletins that you have to follow as you start your trading day. Alright, so without wasting time, I want us to dive in. And this is the trade I was actually able to catch today, right? That gave me around $200. Right, so you don't, while you are trading this model, you don't need your monthly, you don't need your weekly, you don't need your daily, you don't need your 4 hour, you don't need your 1 hour. You only need your 15-minute and your 5-minute or your 3-minute time frame. Alright, so we are going to dwell mostly on 15 minutes, 5 minutes and 3-minute time frame. Alright, so let's go. On 15 minutes, you just come on your 15-minute failure in the morning random session. Alright, 3 things to master. When you come to your 15 minutes, ensure your time, like for me, I'm from Kenya, so my time is UTC +3. Alright, so you have to make sure that time is correct to according to your place of residence. Alright, and the second thing, you just come to your chart. Alright, failure in the morning, you take your line, horizontal line, put it at the middle of the night, that's 12 a.m. and you put another line exactly at 9 a.m. Alright, so what do you do after you put your line? You just map your highest level. You can say I marked my highest level at that point and my lowest level at this point. Alright, the next thing you do, you just wait price to take either the high or the low. Alright, in this case price took the high. Alright, we have 3 things that can happen when you have drawn this thing. Sometimes price may decide to take the high and continue bullish as it did today. Today is on Monday. Or it can take the high and they start going bearish or reverse from after taking the high and reverse coming to the downside. Alright, or it can just take the high and start consolidating for the rest of the day. Right, so mostly I trade when the price has taken the high for a continuation movement, and I also trade a reversal movement when the price has taken the high and it reverses targeting the low. Alright, so let me repeat that. We trade this range between 12 a.m. and 9 a.m. We mark our highest point that price went within that range, not outside, within our range that we have marked between 12 a.m. and 9 a.m. We marked the highest level that price went to and the lowest level that price went to within that time zone. Alright, and the second day we just now sit and wait for random to start. That's 9 past 9 a.m. If price will start and take the high aggressively, we want to see how price will continue upward. And sometimes price may take the high and close inside this range. Then we know that we are targeting this low. Alright, for today, when I came to my market, I saw how price was going. The price was clearly bullish. Alright, you can see this is a clear uptrend. Alright, so I was only expecting to take buys. So I marked my high and my low, and I went to my 5-minute time frame right there, and I was just waiting. Price decided, I was watching when price was around this level. Price came down and suddenly I saw how price came in with this momentum. See this kind of momentum. Alright, let me remove this thing so that I can show you as it played out. So I saw how price this came with great momentum and it gave me with a fair value gap. Alright, we have various entry models when it comes to trading this model. So price took my highest level within my 12 a.m. and 9 a.m. Alright, and I was in a clear uptrend. Alright, you can see it is a clear uptrend when we are within this range. This is a clear uptrend. So let's took the high, left me with this fair value gap. Alright, once I saw this fair value gap forming, I was very ready to take my trade. And once I saw it forming and I saw how this candle came and tested it, I took my trade from the tip of this fair value gap, and my stop loss was somewhere below this level. Alright, somewhere there, and I was basically targeting 1 2 3 somewhere there. Alright, so that's it. That's how I was able to catch a risk to reward of 1 2 3. I was risking something $50 and I was able to get my 200 or something, 200 something dollars. Alright, so that's it. That's how I was able to catch this move. And let's also give another opportunity for entry. If you missed this one, this was another opportunity. You can see a fair value gap, this bullish fair value gap. Alright, that was an opportunity. This black candle came and tested it, so that was our second opportunity to take this trade. And then from there you can see how we get straight to our TP. Alright, so we have two more entry models when it comes to trading this model. We have the fair value gap entry model and inversion fair value gap entry model. Alright, so when price has taken your high or your lowest point within this range, these two lines, this one is my lowest level, this is my highest level. I just wait and see what will price form around that level. Alright, if it created an inversion fair value gap, I would have taken still my buy. Alright, either inversion fair value gap or a fair value gap, both you can just enter your trade. Alright, so today it just gave a bullish fair value gap as an entry model, and I took the trade up to that level. Alright, so maybe tomorrow it give an entry model of that is an inversion fair value gap, we don't know. And this model plays out every day. It forms each and every fucking day, Monday, Tuesday, Wednesday, Thursday, Friday. Alright, some days you can hit stop loss, that's normal, and some days maybe the markets are not healthy and you may not see the setup, but mostly like 4 to 3 days you are assured of this model playing out. Alright, so this is a very useful model that someone can adopt to their trading. Alright, so I'll see what tomorrow will bring and I'll make another video. So that's it for today's video. See you on the next one. Sign off.